Audit planning and fieldwork. Audit procedures. Audit procedures are the processes and methods that auditors perform to obtain audit evidence which enables them to make a conclusion on the set audit objective and express their opinion. These are the list of 5 types of procedures. The first one is analytical review. It is not the procedure that used to obtain audit evidence, but it is the procedure used to assess the unusual transactions or event as a principle or basic to perform other procedures. For example, when auditor found there is unusual transaction or event as the result of using analytical review, then the auditor will use other procedures that are applicable to obtain evidence. The next one is inquiry. Auditors inquire accountant and related management to gather information and obtain an explanation on the matter that found by the auditors. The third one is observation. It is one of the audit procedures that auditors use to obtain an understanding and gather audit evidence and mainly to real process or the way how clients have done some specific business processes. The next one is inspection. Inspection refers to verification or vouching documents. This is one of the most important, and it can be 60% of audit work involved with the inspection of documents. For example, the auditor examines the sales invoices that record in financial reports. And the last one is recalculation. It is the type of audit procedure that normally done by reperforming the works performed by the client in the purpose of assessing if there any difference between the audit works and client's work. For example, the auditor might reperform depreciation calculation and assess if there any difference between auditor calculation and its client's calculation. A test of controls is an audit procedure to test the effectiveness of a control used by a client entity to prevent or detect material misstatements. Depending on the results of this test, auditors may choose to rely upon a client's system of controls as part of their auditing activities. However, if the test reveals that controls are weak, the auditors will enhance their use of substantive testing, which usually increase the cost of an audit. There are 3 general classifications of tests of controls. The first one is reperformance. Auditors may initiate a new transaction to see which controls are used by the client and the effectiveness of those controls. The second one is observation. The auditors may observe a business process in action and in particular the control elements of the process. The third one is inspection. Auditors may examine business documents for approval signatures, stamps, or review check marks, which indicate that controls have been performed. Substantive procedures. Substantive procedures are intended to create evidence that an auditor assembles to support the assertion that there are no material misstatements in regard to the completeness, validity, and accuracy of the financial records of an entity. Substantive procedures include general categories of activities, which is testing classes of transactions, account balances, and disclosures. Second, agreeing the financial statements and accompanying notes to the underlying accounting records. Third, examining the material journal entries and other adjustments made during the preparation of the financial statements. Audit evidence. Audit evidence is evidence obtained by auditors during a financial audit and recorded in the audit working papers. For an example, journal, general ledgers, subsidiary ledgers, and alter records to support financial statements, either general or specific. An auditor applies various audit procedures to obtain audit evidence which enables him to form an opinion whether the financial statements of an entity are free from material misstatement and state a true fair view or not. Audit evidence is the information that the auditor uses in arriving at a conclusion on the basis of which he forms his opinion. The auditor should obtain sufficient and appropriate evidence which enables the auditor to arrive at a conclusion and support his opinion. Audit evidence forms the basis of forming an opinion whether the financial statements of an entity state true and fair view or not. Evidence collected by the auditor should support the contents of its audit report. Sufficiency of audit evidence is the measure of the quantity of audit evidence. Appropriateness of evidence is the quality of the evidence. These are the criteria of good audit evidence. The first one is reliable. The evidence obtained by the auditor is persuasive rather than conclusive. We cannot consider such evidence 100% reliable for forming an opinion. Reliability of audit evidence depends on its sources and nature of such evidence. The next one is sufficient. Sufficiency is the measure of quantity. Audit evidence is sufficient when they are available in adequate quantity. An auditor applies different audit procedures to obtain sufficient audit evidence, like test checking. The third one is relevant. Whether the audit evidence obtained by the auditor is relevant or not depends on the purpose of audit procedures. The last one is source. Audit evidence obtained within the enterprise is known as the internal source. Evidence obtained from an outside enterprise, like confirmation from the third party, is known as the external source. We consider the external source to be more reliable. Types of audit evidence. These are the types of audit evidence. The first one is physical examination. It is the inspection or count by the auditor of a tangible asset, most often associated with inventory and cash, but it is also applicable to the verification of securities, notes receivable, and tangible fixed assets. The next one is observation. It is the use of the sense to assess client activities. Observation is rarely sufficient by itself because of the risk of an auditor changing their behavior because of the auditor's presence. The third one is documentation. It is the auditor's inspection of the client's documents and records to substantiate the information that is or should be included in the financial statement. The fourth one is confirmation. It is the receipt of a direct written response from a third party verifying the accuracy of information that was requested by the auditor. The request is made to the client and the client asks the third party to respond directly to the auditor. Next one is inquiries of the client. It is the obtaining of written or oral information from the client in response to questions from the auditor. This type of evidence is usually not conclusive because it is not from an independent sources, must obtain additional evidence through other procedures. Next is analytical procedures. It is used comparison and relationship to assess whether account balances or other data appear reasonable compared to the auditor's expectation. An auditor may compare the gross margin in the current year with the preceding years. Lastly is re-performance. It is the auditor's independent test of client accounting procedures or controls that were originally done as part of the entity accounting and internal control system. Recalculation is rechecking a calculation whether re-performance involves checking other procedures.